Hey everyone, welcome back to Corporate Decoder. Today, etc. Trust just filed their annual shareholder report for the 30th of April 2026, and I am seeing some interesting performance trends across their funds. Quick note, this is not financial advice, just my take on public filings for educational purposes. These funds, all launched in June 2025, are showing solid though slightly varied initial returns against their benchmarks. First up, let's dive into the Bluemonte Large Cap Core ETF. Ticker BLUC, this fund aims for capital growth, and since its launch in June 2025, it has returned 20.42%. Its benchmark, the S&P 500 index, gained 22.01% over the same period. The report mentions this slight underperformance was due to being a bit underweight in mid cap stocks and slightly overweight in growth stocks. As of the 30th of April 2026, the total net assets for BLUC were a hefty $294 million. Interesting to see the number of holdings is only 4, indicating a very concentrated portfolio. The total advisory fees paid before waivers were $395,556. If you had invested $10,000 at inception by the 30th of April 2026, it would be worth $12,042 for the fund, versus $12,201 for the S&P 500 index. This difference might seem small, but it adds up. Looking at the top holdings for BLUC, we see a heavy concentration in just a few ETFs. The State Street SPDR Portfolio S&P 500 ETF makes up 40.1% of the fund. That is a significant chunk, suggesting the fund is quite aligned with the broad market in this holding. Vanguard Growth ETF is next at 34.5%. Next, let's check out the Bluemonte Large Cap Growth ETF, ticker BLUGR, this fund. Also targets capital growth. It achieved a return of 21.45% since its inception, slightly underperforming the S&P 500's 22.01%. The reason cited is an overweight in large cap growth stocks and an underweight in mid caps, which did better. BLGR had total net assets of $243.5 million. Fee-wise, total advisory fees paid were $328,671. Notice the portfolio turnover rate is 0% here, which is quite low and suggests a very buy and hold strategy for this fund. A hypothetical $10,000 investment in BLGR would have grown to $12,145, while the S&P 500 would have reached $12,201. So a bit more underperformance here compared to the core fund, likely because of that growth stock tilt not fully paying off against the benchmark during this specific period. The top holding in BLGR is the State Street SPDR Portfolio S&P 500 Growth ETF at a massive 51.8%. That is a really dominant position. Schwab's Large Cap Growth ETF follows at 25.6%. Moving on to the Bluemonte Large Cap Value ETF, ticker BVVAL, this fund also aims for capital growth. It posted a 21.12% return. Again, slightly underperforming the S&P 500's 22.01%. This time, the fund explains it was due to an overweight in small and mid-cap stocks, along with a focus on value stocks. It seems the market favored growth a bit more than value in this early period. BVVAL has total net assets of $245.6 million, very close in size to the growth fund. Advisory fees paid were $329,202, also with a 0% portfolio turnover rate, indicating a long-term investment philosophy. For BVVAL, our hypothetical $10,000 investment grew to $12,112 compared to the S&P 500's $12,201. So, all three large cap variants are showing very similar performance patterns relative to the benchmark in this initial period. In BVAL, the top holding is the State Street SPDR Portfolio S&P 500 Value ETF at 34%. Schwab US Large Cap Value ETF is next at 29.7%. Now let's switch gears to the Bluemonte Dynamic Total Market ETF. Ticker BLUCS, this one seeks capital growth too, and it actually outperformed its benchmark. It returned 22.85%, while the S&P Total Market Index gained 22.06%. The key to this outperformance was a significant overweight in small cap companies, which had a much stronger showing than large caps. The report explicitly states they expect to keep this small cap overweight. BLUCS is the largest fund we've looked at so far, with $501.5 million in total net assets. Advisory fees paid were $658,101. Notably, this fund has a 36% portfolio turnover rate, much higher than the others, suggesting more active trading. A $10,000 investment in BLUCS would have grown to $12,285, beating the S&P Total Market Index's $12,206. This confirms that their small cap bet paid off nicely. The top holding here is the State Street SPDR Portfolio S&P 500 ETF at 48.4%, which seems a bit counterintuitive given the small cap overweight strategy, but perhaps it is a core holding providing broad market exposure before they add the smaller companies. Vanguard Russell 2000 ETF, a small cap focused ETF, is the second largest holding at 30.9%, which aligns with their strategy. Next is the Bluemonte Global Equity ETF. Ticker BINT, this fund also targets capital growth. It had a strong showing, returning 26.28%, significantly outperforming the MSCI ACWI Index, which gained 23.30%. The outperformance is attributed to a large overweight in international equities, with about 65% of the fund invested internationally compared to the benchmark's 35%. International markets performed very well during this period. BINT has $345 million in total net assets. The advisory fees paid were $446,114. This fund has a 45% portfolio turnover rate, indicating a moderately active approach. For BINT, our $10,000 investment would have grown to $12,628, beating the MSCI ACWI benchmark's $12,330. That is a nice chunk of outperformance. The top holdings reflect the international focus. State Street SPDR Portfolio Developed World X US ETF is 29.9%, and eShares Core MSCI Emerging Markets ETF is 21%. They clearly tilted towards global markets, and it paid off. Now, let's look at the bond funds. First, the Bluemonte Core Bond ETF. Ticker BDBT, this fund aims for total return and income. It returned 4.00%, slightly underperforming its benchmark, the Bloomberg US Aggregate Bond Index, which returned 4.30%. The report says performance was consistent with the benchmark because the fund's positioning is similar. The duration, which is a measure of interest rate sensitivity, is 5.88 years for the fund versus 5.78 for the benchmark. BDBT has the largest net assets among the bond funds, at $448.4 million. Advisory fees were $636,908. Its portfolio turnover rate is only 8%, showing a very passive approach to bond investing. A $10,000 investment in BDBT grew to $10,400, while the benchmark reached $10,430. A small underperformance, but very close. The top holding here is the eShares Core US Aggregate Bond ETF at 40%. This is a very standard core bond holding. Schwab Intermediate Term US Treasury ETF is next at 25%. Next, the Bluemonte Short-Term Bond ETF, ticker BLESS. This fund also focuses on total return and income. It returned 3.37%, underperforming the benchmark's 4.30%. The reason given is that rising interest rates favored shorter duration investments, and this fund has a significantly lower duration at 3.45 years compared to the benchmark's 5.78 years. This is actually a positive characteristic when rates rise, but the overall return was still lower. BLST has $156.4 million in net assets. Advisory fees were $219,721. Like BDBT, it has a very low 0% portfolio turnover rate, consistent with a stable bond strategy. A $10,000 investment in BLS drew to $10,337 versus the benchmark's $10,430. So it did underperform, but its shorter duration would typically offer some protection in a rising rate environment, even if the total return was lower in this specific period. The holdings are heavily concentrated in short-term bond ETFs. Vanguard Short-Term Bond ETF makes up 54.6% of the portfolio. eShares Core US Aggregate Bond ETF is 25.1%. Then we have the Bluemonte Long-Term Bond ETF, ticker BLTD, seeking total return and income. It returned 3.82%, underperforming the benchmark's 4.30%. The main driver here is its much longer duration of around 11 years compared to the benchmark's 5.78 years. Longer duration bonds are more sensitive to interest rate changes, so when rates rise, their value tends to drop more significantly. BLTD has $152.8 million in net assets. Advisory fees were $219,350. Its portfolio turnover is also very low at 5%. Again suggesting a buy and hold approach for longer term bonds. For BLTD, our hypothetical $10,000 investment grew to $10,382, falling short of the benchmark's $10,430. This underperformance is directly tied to that higher duration exposure. The holdings are heavily weighted towards long-term bonds. Vanguard Long-Term Bond ETF represents 64.4% of the fund. E.T.C's core US Aggregate Bond ETF is 25.5%. Finally, the Bluemonte Diversified Income ETF. Ticker BLUE, this fund aims for both total return and income. It delivered an impressive 7.68% return, significantly outperforming the Bloomberg US Aggregate Bond Index's 4.30%. The fund achieves this by taking a more creative approach to income generation, investing in a mix of investment-grade bonds, high-yield bonds, leveraged loans, and even income-linked equities like preferred stocks. These asset classes performed well, driving the outperformance, especially in early 2026. BLUE has $101.8 million in net assets. Advisory fees were $148,527. This fund has a much higher portfolio turnover rate of 41%. Consistent with its more dynamic and diversified income strategy. A $10,000 investment in BLUE grew to $10,768, a clear win over the benchmark's $10,430. This shows that taking a broader, more creative approach to income can pay off. The top holdings reflect this diversified income strategy. State Street Spider Bloomberg High Yield Bond ETF is 19.9%. PIMCO Active Bond Exchange Traded Fund is 19.6%, and MFS Active Core Plus Bond ETF is also 19.6%. This fund is really spread out across different income, generating asset types. Now let's look at some key financial statistics for all funds as of the 30th of April 2026. Focusing on the large cap core ETF BLUC. Total advisory fees paid were $395,556, representing a very low 0.20% of assets after waivers. This indicates efficient management costs for investors. For the large cap growth ETF BLGR, advisory fees were $328,671, also at 0.20% of assets. The large cap value ETF BVAL saw $329,202 in advisory fees, again at that 0.20% mark. The dynamic total market ETF BLUCs, which is much larger, paid $658,101 in advisory fees, still a very efficient 0.20%. The global equity ETF BINT had $446,114 in advisory fees, also at that 0.20% rate. Moving to the bond funds, the core bond ETF BDBT paid $636,908 in advisory fees, noted at 0.20%. The short-term bond ETF BLST had $219,721 in fees. The long-term bond ETF BLTD had $219,350 in fees, and the diversified income ETF BLUE paid $148,527. Notice all these bond funds and equity funds are listed at 0.20% expense ratio, which is extremely competitive. It is interesting to see the portfolio turnover rates. The equity funds generally reported 0% turnover, except for the dynamic total market ETF at 36% and the global equity ETF at 45%. This suggests the equity funds are largely passively managed or have a very long-term outlook. While BLUCs and BINT are more actively managed, the bond funds are also quite low, with BDBT at 8%, BLST at 0%, and BLTD at 5%. This is typical for bond funds where active trading is less frequent. Let's look at the financial highlights specifically for the Bluemonte Large Cap Core ETF, BLUC on the 30th of April 2026. Net asset value at the start of the period was $24.98. They generated $0.20 per S-share from investment income and a substantial $4.89 per share from realized and unrealized gains. After distributing $0.16 per S-share, the ending net asset value was $29.91. The total return was 20.42%, matching the earlier performance figures. The expense ratio was 0.20%. All these figures reinforce the low-cost passive strategy for most of these funds, with the exception of BLUCs and BIN, which are more actively managed and show higher turnover. For BLUC, the net investment income ratio was 0.83%, which is quite good for a core equity fund. The total net assets for BLUC at the end of the period were $294,390,000, confirming its significant size. Now, let's touch on the auditor's report. Cohen and Company Limited audited these financial statements. Their opinion is that the financial statements present fairly in all material respects the financial position and results of operations for each of the funds. They've also been the auditor for funds advised by Exchange Traded Concepts since 2012, which suggests a long-standing relationship. Looking at the fees for 2026, audit fees were $211,725 and tax fees were $49,000. These fees are for services provided to the trust as a whole. These amounts seem reasonable for auditing a group of this size. Digging into the schedules of investments for the Bluemonte Large Cap Core ETF, the total investments at fair value were $292,469,210. The cost basis was $258,697,505, showing a healthy unrealized gain. The largest single holding is the State Street Spider Portfolio S&P 500 ETF at $118 million. Which is indeed greater than 25% of the fund's total investments, as indicated by the dagger symbol. The asset weightings show a clear preference for exchange, traded funds at 99.3% for the core ETF. This confirms a strategy of using ETFs as building blocks. The notes to the financial statements explain that Exchange Traded Concepts Trust is a Delaware statutory trust. Each fund is an actively managed ETF unlike index. ETFs, their main objectives are capital growth or total return and income, depending on the fund. It is interesting to see the initial capital contributions. For the Bluemonte Large Cap Core ETF, over 1.9 million shares were issued in exchange for $48.2 million worth of securities. This highlights the initial seeding of the funds. The report details their security valuation process, which adheres to us generally accepted accounting principles. They prioritize quoted prices in active markets, then observable inputs, and finally unobservable inputs if necessary. Everything here is classified as level 1, meaning they are valued using readily available market prices, which is expected for ETFs. They also outline the principal risks. Key ones include authorized participant concentration risk, meaning a few institutions handle creations and redemptions which could impact trading. Then there is exchange traded funds risk, where investing in ETFs exposes them to the underlying risks of those ETFs. Market risk is a standard mention, noting that securities can lose value due to economic or political factors. Non-diversification risk is important for some funds, meaning they can invest heavily in a few issuers, making them more volatile. Across all the Bluemonte ETFs, the costs for a hypothetical $10,000 investment were consistently $19, which works out to 0.20% annually. This extremely low expense ratio is a major selling point for these funds. Looking at the statements of operations for the Bluemonte Large Cap Core ETF, net increase in net assets from operations was $38.4 million. For the Large Cap Growth ETF, it was $32.6 million. The Large Cap Value ETF saw $34.3 million. The Dynamic Total Market ETF, which performed so well, had a net increase of $75.1 million from operations. The Global Equity Fund had a strong $57.3 million increase. The bond funds showed more modest operational gains. Bluemonte Core Bond ETF had $11.4 million. Short-term Bond ETF had $3.7 million. Long-term Bond ETF had $3.2 million. And the Diversified Income ETF, with its strong performance, saw $6.1 million. Overall, these Bluemonte ETFs, despite being relatively new, having launched in June 2025, have shown some promising early performance. The equity funds generally followed their benchmarks closely, with BLUCs and BINT outperforming thanks to strategic choices in small caps and international equities respectively. The bond funds were mixed, with the diversified income fund standing out. A major theme across all these funds is the impressively low expense ratios, making them cost-effective options for investors. That is my take. Stay decoded. To access the research tools I use and other resources, check the description below. Don't forget to like, comment, and subscribe for more corporate filing breakdowns.